Hey everyone, hope you're having a good day. My name's Andy, channel's Finding Value. Today we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, commodities, ETFs that I follow, and I'll interject my financial opinions as we go. If you need help with anything, check out finding-value.com. That's where I dive deeper into these topics, deeper into what I think drives these markets. And we still have a coupon code, Mayday, MAYDAY, that is active. Let's dive in here. Let's see what's going on today. We've got the DXY and yields that are really kind of throwing us a curveball a little bit. We've got stronger dollar. Now, keep in mind, we've got a lot of support underneath us. All of this support, horizontal support. So it very well could continue higher to the upside if yields do turn around. The dollar doesn't look too bad. We've got a large buying pressure candlestick and some small selling pressure candlesticks coming down. It very well could be a flag pattern that continues to the upside, and we've got a lot of support underneath us. The reason we want to figure out the direction of yields and or the dollar is because it has it has a huge impact on how money flows in the system. That's why we're looking at this whole thing. And if the dollar continues to strengthen with yields, the assets that do well in that environment are different than the assets of a falling dollar. A falling dollar and lowering interest rates are good for emerging markets, for some of these interest rate sensitive assets like housing, some of the real estate market, home builders, stuff like that. Mortgage rates pull on back with lower yields, and banks, some of the regional banks, some of the other non-profit sectors that rely a little bit more on borrowing money. Those do well in a declining interest rate environment versus an increasing interest rate environment, which might favor something like oil or something like that. Right now, we are poised to potentially this is a tough read in the short term here. We've got some big selling pressure coming down, and we've got this kind of weak bounce. Most of the time when I look at this, it generally falls lower. Usually when you get these reversals, you'll get a big, large green candlestick, basically stating that we're going to go up. We don't really have that. We've got the big red candlestick. It's a bearish engulfing there that started this downward move. Is this move complete? Difficult to say. Difficult to say. And a lot of the times it goes from reversal candlestick to upwards to a potential reversal candlestick, which is here. And then you see it from reversal to reversal. But sometimes you don't get the clear signal. It just kind of melts up and moves on up. The 2-year yield, we're back within the pattern, but we need to stick in. So are we going to roll out of this thing, or are we actually going to continue higher? We're right at that decision point for the 2-year yield. If the 2-year yield rockets higher, that means the Federal Reserve is going to hold interest rates or increase interest rates in the future. The two-year yield is pricing that in, and the insiders are positioning for such a move. So yes, we've got a big selling pressure move lower. We've been kind of coming up, and I was looking for a rollover here because you've got the rising wedge, the breakout, and then usually you get the back test. Now, here's the thing. Is this still the back test? And are we going to rip lower? That is what we're looking for. And that is maybe some of the information that might clear the direction that we might be going. So that's what we're looking for. What does it look like over this next week? Are we going to keep going, or are we going to roll over? Now, if we roll over, precious metals do quite well. If we continue to pile on and go forward to the upside, precious metals are going to have a little bit of a headwind. and they're going to be feeling the increasing interest rate and the stronger dollar. And remember, commodities and precious metals are measured in dollars. So when you strengthen the dollar against other currencies, you'll see gold most likely go up in other currencies, and you might not see it go up in the dollar. That's what I'm getting at. And that's why emerging markets does well when the dollar drops. It's all currency based. US 10-year also seeing some strength today. We've got this selling pressure move into support, and then we bounced off that support. Is this going to be enough to stick the landing to move higher, or are we going to roll back over? Don't know yet. And we do have a longer term big kind of flag pattern that could break to the downside. A lot of the times what I do is I look before it to see how much pressure is being sold lower. And then we see the bounce coming on up, which could be a flag pattern. We need more data here. We need some more trading sessions ahead of us to see if we're going to turn lower or not. And then the 30 years, it's the same thing. It's the same flag pattern, which is generally a bearish pattern. And then we're right kind of at the tip here. We do have kind of a bullish candlestick that showed up today. You could say that this is a broken downtrend line that we could go higher. That's very well possible. So it muddies the waters with today's action. Maybe we've got to cycle back up again before eventually breaking down. If I know a lot of people are probably looking at the markets, they were down basically across the board today. And some people might be worrying about a recession. If that was the case, we would be seeing the 2-year dive bomb. We would see this really drop. That's not what we're seeing, though. We're seeing strength, which is kind of weird. And it's not really an indication yet that we're going to get some big pullback yet. Last recessions, they were almost always preceded by these big moves in the 2-year yield lower. You know, this was 2000 here. This here is 1990. That was a real estate bust. Here's 2007. You can see that was before the big decline in 2008. And this was 2018 where we started to decline. We don't see that type of action occurring. And it makes me think that the recession calls are still too premature. TYX-TNX ratio, which is weird, it is inverting further. So we are continuing to invert here and stay inverted for this ratio. When this uninverts, that's generally when gold and silver rates pull back, all of that stuff kind of unwinds. And guess what? We're not seeing that evidence, at least not yet. TLT, bond prices being sold off a little bit, surprisingly, guys. I was surprised by this move. We got bullish engulfing. We had another kind of bullish setup here, and now we have a bearish engulfing, which means we could reverse, which means yields will go up, bond prices will go down, which is interesting. We've got the US 2 and 10 that has broken out to the upside, and we are inverting even further, which is also pretty surprising given the length or the duration that we've been inverting. So it's very interesting there. Gold did not like that yield curve inversion, doesn't like the rates going up, doesn't like any part of it. We're down about $60 an ounce. Is this the beginning of a move lower or a consolidation? It could be. And we'll have to see what kind of follow through we get over the next few trading days, weeks, months. But we're getting a lot of selling pressure up here. And I think yields have something to do with it. Silver also getting some selling pressure. This does have a move lower. We've got good support at about $29. So I think we'll probably get stuck around the $29, $30 range. Now, looking at this big picture view, guys, this still looks absolutely excellent setup. We've broken out. we've been ripping it, and we've been ripping it pretty hard. I mean, this is a pretty big move, and it was overdue, or not overdue, but sometimes you get these consolidations or pullbacks in these big moves like we had here. So it's probably just a normal pullback. We'll see what occurs here. And gold and silver generally front run money printing, loosening, loosening of yields, and eventually money printing. Platinum down a little bit too. That's also going into a little bit of a corrective mode. Some big selling pressure going on there, right at that resistance level. And then we've got palladium down 3.22%, which is also pulling on back. So we're getting a pullback across the board in precious metals. And most of the sectors that I look at, they were all pulling back today. Kind of a brutal day for the most part. XAU to gold ratio holding quite firm. Gold and silver mining companies not really falling about as much as the metal itself. We've still broken out here. It is still a broken downtrend. And what we want to do is we want to stick some of these longer, we want to stick a weekly closing, which we did, and now we want to stick the monthly closing above them, which we will probably do. So everything still looks okay from the ratio perspective, and the breakout is still good this time. The CRB index down a little bit, just down a little bit. Maybe we'll close this gap, get the weak hands, the paper hands out of the trade. But the CRB index, looking at it from this perspective, still looks good. We are making a higher low and a higher high, which means we are in a new uptrend still. CRB index divided by the S&P 500 surprisingly was higher, even though the CRB index was down, which means the S&P 500 went down more than the CRB index. And we are still in this pattern here from a very low level, insanely low level on this ratio. So GDX was down a little bit. Looks like we're doing some sort of retest here. There's your line going across. Could be doing a retest of the breakout for GDX. GDXJ, that's already broken out, but we've got some stiff resistance right above us. We have not broken out of that stiff resistance, is what I'll call it. And maybe we loop back around like I've said before. SILJ, down a little bit, just like everything else. And that one's kind of in the middle of nowhere. That is a reversal candlestick when looking at it from a weekly viewpoint if we close below the 50th percentile here. So we could get a little bit of a consolidation slightly lower, whatever it is, flag pattern, pennant formation, whatever it is. We've got crude oil down 0.9%. That does look a little bit weak, and we could pull back perhaps a little bit further. I put this fractal from last bull market over it, and the fractal that I grabbed is from the beginning of the 2000s bull run. From 99, it pulled up. We had a slowdown in technology stocks that brought crude oil down, and then it started ripping in 2002. That same fractal overlaid on top of this is what it looks like. Now, when I zoom in on here, sometimes it's difficult to know exactly where these fractals line up. Is this the big pullback up here? And then does it line like that? And is this the kind of final ending move that we get before a move higher? Very well could be the case. Or do we have to cycle down further where that's the end, and perhaps maybe this has to go back and do a retest around the $60-ish level? Very well could be. And that could coincide with weakness in the overall market. The thing that I'm not seeing that we saw back in this pullback is we saw a rapid decline in the 2-year yield, which we do not have at this time. So the pullback may not be as big as it was where this blue fractal is. It's not the same market conditions necessarily. Or maybe we'll eventually see the 2-year yield drop. Maybe that starts, and maybe we do get a pullback to this level down here. Very possible. TTF gas ripping to the upside here, kind of broke out of this little pattern here, while Henry Hub was down 5.6% with most everything else, and we are coming up to some resistance all through this region through there. Our boy XOP, yeah, you know me. Now, if we are going to get a recession, and if we are going to see a rapid decline in crude oil, then why do we have an inverted head and shoulders plopping up in XOP here? Why did we break the neckline? And why are we still above all the support levels? So this is something to watch. We're still above the neckline. We're still above support. There's a reason we broke up into this. And we've got yields that could still potentially go higher, which generally speaking, crude oil and yields move together because the consumer price index goes up after oil goes up. So this is what we're looking at, and this is kind of what we're currently seeing and watching. Keep in mind too that there's a lot of commodities that have falling wedges that are starting to move higher, not lower. We've got OIH, and again, we've got this selling pressure, like I said, the bigger selling pressure, flag pattern, bigger selling pressure, and all these small updates, which makes me think it still wants to puke down to where I drew it the first couple of times. Again, I don't know the short-term price market action. I can't tell you that I know this in advance or anything like that. But what this suggests is that we probably bottom somewhere in support in the low 300s, would be my guess, before trying to see an eventual turn. But my opinions can change quickly if I see a reversal candlestick down here. That's what we're looking for. Sprott Physical Uranium Trust, we are breaking this support trend line at this time, and we'll see if we can recapture it. How did I know, or why did I state that this looks a little bit weak? The big selling pressure and the weak bounce on the candlesticks. That generally resolves lower, and that's what we're doing right now, resolving lower. Now we're looking for when are we going to get the reversal candlestick to move up. That's kind of what I'm looking for, or whatever pattern it creates. URA down a little bit, but still above support. It still looks really good. So the equities are kind of holding on here, and we'll see if there's any follow through and what the next couple of trading sessions look like. URNM also on support, and we'll see if the support holds. That's where we're at. And URNJ also well above support. And all of these have broken to the upside of those resistance lines. All of them have broken out. Some people will say, oh, it's a false breakout. I'm not buying it, guys. Not buying it because you've got confluence across the whole board. You've got XOP breaking its neckline. You've got a lot of other sectors that are above resistance and holding on resistance, or I should say support. So I wouldn't be so quick to make that comment. We need to see the action. URNJ versus URNM, URNJ actually outperformed, and I'm watching for this to move higher. If that moves higher, I'm going to be a huge bull in the junior companies because we're supposed to be a bull in the junior companies when this breaks. TAN down a little bit, doesn't like the higher yields, and anything that has high yields or anything that is yield sensitive is going to get hit by higher yields today. But what do we see on this trend? This is broken to the upside. Well, maybe that means that rates could still go lower. Could be. Let's get more data. Copper looking pretty rough today, but this thing has been on a tear, guys. Here's your big pattern. 1, 2, 3. There's your 3-hump consolidation. You get your breakout. And we broke out to the upside. It had a pretty big run. I mean, this is a big run, guys. 380 all the way up to $5, 512. Of course, you're going to have some sort of, return move at some point, some consolidation or pullback. Maybe that's what we're going through right now. We've got COPX down a little bit as well, down 1%. Yesterday was a bigger percentage move. That also broke, and it's had a pretty big run, and we could see a consolidation here. That's what the big weekly bearish engulfing has on it. We've got lithium down Yeah, but that's sensitive to interest rates. We've got REMX down, which is another one that's sensitive to interest rates. And this isn't a valid, it's not valid there. We've got the S&P 500, which surprisingly, look at this candlestick, guys. It's a big bearish engulfing. We had a bunch of bearish engulfings back here too. Is this going to actually have some follow through where we head lower? Could, because this is a reversal candlestick. We also got it on the NASDAQ. And I know the NASDAQ does not like higher yields. There's a bunch of bearish engulfings all through here. Generally means that people are selling and that this could potentially head lower. It's still a possibility here. Russell 2000, big selling pressure move, 1.6% lower. We're up against some resistance above us. So maybe we pull on back. And if we were to make a guess, now I don't see the 1, 2, 3. It's kind of, this is a weird looking pattern here. But we're up against resistance is where we're at. We've got KRE down. Obviously, this has been real sensitive to interest rates. We had a pretty big interest rate move, so it's back to support area, that whole channel support area. Emerging markets, obviously this pulled back. We could see a little bit more of a pullback. And again, it depends what interest rates do. That is a bearish engulfing, and we could potentially head lower or sideways to consolidate or what could potentially be coming. XHB doesn't like the higher interest rates, so we could pull back, and we have been pulling back. We've got MOO, also a pretty big selling pressure day. For some reason, MOO is real sensitive to interest rates, but we're back to support, which is that line going across here. So I think we'll hold through this support region. We've got iron ore continuing to work its way on up slowly. It's a small down day today, but still looks good to go higher. That looks like it's bottoming. Nickel also looking pretty good. We were down a little bit today, down 1.5% or so, but this still looks really good. That's turning. Aluminum is already turned up. We got some selling pressure today, but still looks good to go higher. It's not too bad. It's just a little probably, we'll call it break lower in the short term here. Consolidation and or pullback before heading higher is what it looks like. Baltic Dry Index down a little bit, down 1.3, right against that major support level that goes all the way back into the 80s. Huge support right where we're at. We've got Newcastle Coal up 1%. And I still think this looks fantastic to move higher. And what are we seeing in TTF Nat Gas? It's moving on up. So those two move together. We've got BTC down 3%, but that's still above the breakout. That is a retest. That still looks good to go higher. And then Ethereum, yeah, it's down, but that still looks good to go higher. That's a small little bloody nose candlesticks, those three there. SMCI does have a reversal candlestick, but it's above a lot of support. We'll see what that actually plays out, how this plays out. Is it lower or is it a retest? And then we move up, we'll find out. And then NVIDIA reported today, that did gap up. We'll probably close this gap and we'll see if that can go on higher. So that's what I see in the markets today. A lot of return moves back to retest levels. Silver and gold selling off quite hard on this pullback reversal. Good support in the $29 area for silver. That could be an area that we pull back to potentially. But remember, silver moves pretty quick. I don't try to time these things in the short term. I'm riding it for the long term, big picture view. Gold and silver, they also they front run what could potentially be a lowering of yields. So that's probably what they're doing. Problem is, I don't know if the market knows when those yields will necessarily go down. So I think the market's trying to price all this stuff because it doesn't know exactly where yields might go. It's easy to say that we're just going to go higher with yields, but there could be a slowdown in the market. We could get yields to come on back for a period of time. That would be the end of the mid-cycle wobble. Basically, they raise rates, they slow everything down. Federal Reserve is they. We get a slowdown in the market. They lower rates like they did in 2001, 2002. The lowering of rates reignites the housing market just like it did in 2001, 2. They might conjure up some ridiculous loans, launch the housing market to the upside after they lower rates or during the lowering of rates. And then this commodity bull market just rips. That's kind of how I see it. And then I'll also talk about some of this stuff during the weekend question and answer session with a bunch of data to back my opinions here. So I don't see that recession necessarily coming yet, at least when looking at historical yield data. So generally what we see if a recession is coming and there is weakness in the market, we would see the 2-year yield drop like a rock. It would drop, 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 drop. What that indicates is people are running into the 2-year yield, and it's insiders front running the Federal Reserve that's going to lower rates. We don't see it yet. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys would like. You can see how I'm playing this commodity bull market. I've got a 7 a.m. question and answer session coming up on Saturday. I will go over a lot of information that I look at and a lot of data on how these commodity bull markets kind of play out and when they play out. And that's what we'll focus on to get you guys the confidence that is needed to hold through this volatility. All right, guys, we'll catch you later. This is Finding Value.